All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you haven't done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon, and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. It's been an awesome year for both of those things so far, and we're just getting started. But anyways, this week, we had another green week, and one of the calls I made on Wednesday was that we should see a breakout of this range on Thursday, and more specifically, the range that has been kind of in place over the last month or so. And you can see here, if we just draw, I think I've got it on the SPX chart. Yeah, there we go. You can just see here, nice little triangular pattern, and we've had lower highs but higher lows really since that the DeepSeek sell-off a few weeks ago, and we did break that range yesterday. One of the more important things that kind of came into that was CPI yesterday, and once we saw this gap down with the 6,000 handle holding, I knew that that would likely become a little bit of a spring for price here. So bears really got everything they wanted macro-wise. We had hot CPI, hot PPI, just really not even good tech earnings. You got DeepSeek, tariffs, this, that, and the other thing, and yet the market's still putting in higher lows. That's usually a good sign that the market's being resilient and wants to go higher. I think we'll see that likely into Options X, which will be next Friday. Remember, next week is going to be shortened because of President's Day. So Monday, market will be closed. And, we're looking for kind of an upside bias market into that right now. And we're just sitting just off of all-time highs here on both the NASDAQ and the S&P there. And there's the QQQ. You can see almost tagged the new all-time high today. It technically did get above the red bar breakdown high on the FOMC from December. So that's basically been round-tripped at this point, and obviously the S&P is hammering on that as well. If we look at the spider, you're going to see here that we're into kind of that previous 610 area, and we're just kind of creeping above that right now as we get into power hour here on Friday. But all intents and purposes, it's not of much consequence if we close right on it, above it, or below it here. We've had a good push here, and higher lows here should get us up towards the 620 handle on SPY. First little roadblock will be around 6150 SPX. I'm starting to see some call interest, market makers starting to hedge up into that, and then after that, 6200 and so on. Another kind of area to use a measured move from. I know there's a lot of lines here, but I'll clean it up. You can see the wedge there on the ES. But if you look at the gap down from DeepSeek and then the rally back, it's about 200 points. The rally from the tariff dump from here to here, about 200 points to about 190. And then we just take it right here. The gap down this Monday, they ran the same playbook 3 weeks in a row. And obviously they're not running the sell-off playbook here this Friday. But you can see here, we didn't get anywhere near 59.50. We actually got about 65 points higher than that. So if we just add 200 points to 60.15, it's going to take you just above 6,200 on ES, which again for SPX, it's about 6,250. So that would be kind of your macro target here that we could see. So that's your measured move right now, and market is still acting well. I will say for the bears, there is typically a window of volatility around February OPEX, or like kind of after that. Historically, you'll recall that was kind of what happened with the pandemic. So as soon as February OPEX rolls off, there could be some window of volatility there where the macro can start to matter a little bit more. But right now, the market's fighting that off. Bears did not do enough damage to kind of get the sell going. And we're just seeing quantitative flows kind of prop the market up right now. And I think we will see dips bought at least until next Wednesday, if not next Friday. So market's still acting well right now, and it's been able to fight off all this data. And that's a market you don't want to fight until it gives you a chance. Now, if it, what would be the signal here? Let me go back to the spiders. It's pretty simple. I mean, do we just go up to 620, and then if we break back down on volume with a weekly close below 610, then you're in trouble. Right, so then we got to start talking about bulls playing defense because we could be looking at a failed breakout. But until then, market's acting well. Don't fight a dull market here. Lowest volume on record here for SPY. That's non-holiday. 17 million shares here at 3:17 p.m. So QQQ here inching up, getting close to 540. That will be a level early next week. So essentially just past double top. IWM up 21 cents today. Kind of finishing the week a little flat to positive. It's still live on the weekly time frame, but that 230 handle is just a lot of resistance there. If it can ever get through that, it should take off pretty hard to the upside. But right now, a little bit weaker. I think a lot of the reason the NASDAQ, you'll notice the IWM kind of outperformed. It was kind of sideways, but it still outperformed the NASDAQ during this dip to a degree. And I think a lot of that was hedges to big tech earnings that are now rolling off. And those bank longs are starting to come out of the Russell and go into the NASDAQ a little bit. So you're seeing the Russell and the Dow underperform. You can see the Dow actually red today. I mean, it's not horrible. It's not broken, but it is red on a day where the market usually, is just mostly up. You can see the Dow does have a nice little pennant here as well. And maybe that's just waiting for another break too. Semiconductors coming back here, got above that key 250 handle. We're going to close the week above that too. TSM had some news today about, I think, partnership in the United States, taking over for Intel, I believe, something of that nature. We also had NVIDIA getting back towards that key 140 area. And we talked about this last week. I said this is a key chart for bulls. And it turned out to be true. The engulfing candle, holding the weekly 50 MA, holding that trend line. And now it's back above the weekly 20. So NVIDIA trend is back up here. That's a huge positive for bulls. SMH next level 260. So it's got a big fat gap to fill here. And if it can get going, it can do that. Broadcom also has a pretty good pattern here too. That could see 250. My favorite IGV, very, very, very nice action here. Again, we had the reversal last Friday, but no follow through for bears. And this is just right back above that 106, and it's going to close the week above that. So good action there for cloud software. That continues to be one of my favorite sectors. Dow Transports with a nice day up 1.25. And again, right back to that 16.6 area. So the jury is still out next week, but it is above one support, one key point of control, and it has come back nicely. Interest rates. I did an article on my website if you guys want to check that out. And I'm just going to show you because I like this work here. But inflation has not been defeated, but here's why bonds can still rally. Link is right here. You guys can check that out on carnivoretrades.com. But essentially, I was highlighting the fact that rates right now, again, we had hot inflation, hot PPI, hot CPI, like way, way hotter than normal. And yet you can see here, for instance, the TLT, yes, it had a sharp reaction down Wednesday with CPI, but really all it did was retrace to the 618. And it has since gotten back above the 89 handle. If we look at ZB, which is what I like to use, you can see clearly back above that key resistance. So positioning right now and always matters. And I think right now we're seeing the bond market fight off bad inflation data. I don't think it has any underlying macro reason other than the fact that bond shorts are really piled in. I mean, inflation expectations are just very high right now. In fact, I'll just show you a chart from that article. This is from a week ago, but still. Record short interest in TLT, like big time, not even close, right? So you can have bad macro data or favorable macro data for yields, and yields may not go up anyway because there's just no one left to buy. So bonds here still acting well. I still think TLT can get to 93 if it can reclaim $90. And so you can see a squeeze up there. I think that would be major resistance, and that could be a selling opportunity for bonds again. But right now, rates holding up. Bonds holding up versus rates. XHB up 67 cents today. This has been soft. So this has been sensitive to macro data. I do not like this weekly pattern here on the XHB. Your positive is you're holding that green bar low on the weekly time frame. Now this has got a lot of work to do here to reclaim. The trend is still up, but it's in the danger of turning kind of neutral here. So careful with XHB. VNQ is much better. It is peaking above that level. Not a close yet, but it did peak above this week. So if it can continue, getting its wheels spinning, wheels turning next week and get above and really, really above this red bar high, I would feel a lot better. But it is a little bit better than XHB though. So it's holding up a little bit more neutral on it. XLF here just off of all-time highs. No problems with financials. No problems with KRE. Was a down week though. And then KBE, same deal. And broker-dealer still holding up well. Robinhood making a lot of that crypto money. So dealers are loving this increased volatility and increased trading transaction environment. Oil here, down on the week. We have a lot of chitter chatter about the Ukraine-Russia ceasefire. And I'm starting to think that's probably going to happen. Poly market is now favoring odds that it will happen in the first 3 months of Trump's term. So that would be quarter 1, essentially maybe early quarter 2. Oil is not panicking to the downside yet, but if I see, and I've seen a few little footprints here, but if I start to see oil really panic to the downside, I will let you guys know. Because if that happens, this is, to me, what will happen is oil will sell off sharply on no news for a couple of days, and then the news will come out. Somebody knows beforehand, they always will, and that might coincide with the stock market rallying for a few days too. So I think I'm looking for clues here to see if that does happen. I think that would be a buying opportunity in oil, by the way. But right now, we'll watch here. I don't really have a good trade on oil. I'm just going to say $70 is kind of support for right now. I don't really like oil or energy here. I don't hate it. I just don't have a good setup. XLE has been holding up a little bit better, though. So choppy week here, but it closed green. It's going to close green here, and you have higher lows. So really not anything terrible for the oil stocks. Still hanging in there. But oil itself, be careful with it. CCJ, got to be careful. I'm warning about this inside bar pattern here, and that is in danger of breaking down. So for bulls, Monday, you want to see, or say Tuesday, because Marcus goes, you want to see like a tail candle or something like this, and then you want to see it follow through to the upside after that. That would indicate shorts are trapped at the lows, but otherwise this can go down here. So be careful with these bigger uranium miners, the old school ones. URNM already breaking down, NJ already breaking down. There's kind of a new wave of nuclear stocks, and that's the Oklos, SMR of the world, right? And there's this ETF that does have those included called NUKZ, and these are the ones that are getting all that institutional money chase. This chart is still okay. Those traditional ones are under pressure here. Nat gas still strong, so Nat gas is continuing to have a good quarter, and I will say maybe this is turning the corner here. Again, looking back here, this is the first time that you've had a weekly confirmed higher low and higher high in years on nat gas. So, if we can get above 4, they can squeeze to 5. Nat gas can go fast, really fast. So we'll have to see how that works here. Still got some resistance at 380. I think the contract rolls kind of soon too, maybe in like a week or two. We'll just check on that. But yeah, on the H contract, $4 is still resistance now, and you got a wide range down to 3 really. So I don't see anything on it right now. I wouldn't do anything with it. It's kind of in no man's land. But if it puts in a bull flag, and maybe it could be a play. But just be careful. Nat gas is wild. Dollar index lost support. And you want to know why the market's rallying? This is a big chunk of that reason. So lower low, weekly lower lows, and lower highs confirmed now on the dollar. That said, it's still above the weekly 20 MA. So you kind of did some damage, but from a technical perspective, it's not broken. But you do have that sellers exercising control here for the first time since October or late September, literally. So, but still holding the weekly 20 though. So I'm still neutral on it. I would say my general lean is, we can go retrace 105.50, maybe 106. That's not going to go in a straight line though. Right now, I think everybody's throwing themselves off a cliff here on precious metals. At least I've seen a lot of top calls today. A lot of people are concerned right now, specifically with silver. So I picked up silver Wednesday morning after CPI, and we just got into target 1 today, took some gains right up into this area, and I've seen a lot of people crying foul about this. It's weak, it's lower high manipulation. I wouldn't rule it out, but there's a reason why I picked like the 34 handle as target 1. It's because this, this is where if you bought this, thinking it was a bull flag and it was going to go higher, you were trapped here. So anybody up here is going to turn into a seller. I'm not surprised it backed off. And in doing so, it did zero damage to the chart. I mean, one example I was just talking to somebody about earlier is just assume that this tail didn't happen. Let's just say the daily candle looked like this. Would you still say that it's a problem? Right? It's still closing basically where it was yesterday. So I'm not really that worried about it. Let me show you another thing too, and I brought this up before. Silver looks about the same, but we should be somewhere in here in the cycle. I mean, maybe we're closer to late Feb. Maybe we'll get a pullback March, but we should get a push up. This is gold, by the way. We should get a push up into April. And that's why I came up with a target of 3K for quarter 1. So late quarter 1, early quarter 2. And we're basically there already. Another thing I want to show you too is I don't think it stops at 3,000. I think that's where everybody will try to short it, and I don't think it'll work, at least not right away. But if we just take the low to the high here on gold futures, duplicate it, and then just drop it there, it takes you right to 31. So my guess is a little bit, a little bit of consolidation here, and if I can get the chart right. A little bit of consolidation here, and it can go higher. So, I mean, we're still above all the moving averages. I mean, this is it's a sell day. And don't get me wrong. This here earlier in the week, that was some distribution right there on Tuesday. It definitely was distribution. And I think today there's a little bit of distribution too. But, distribution takes weeks, months, sometimes years. So I don't see any problems here. It might just need to consolidate. Bottom line. GDX still acting well too. Reversal today, but again, trend is fine. Silver should get to 38. Platinum outside move, but again, still above the moving averages. Palladium still holding up okay too. I still have my Sprout here, and it just can't. Technically, it's at my first target already, but I'm kind of letting it run a little bit more. I'm looking for maybe an inverse head and shoulder here. It's not the greatest right shoulder. Either way, it's a good pattern here, and I think this is getting ready. This tends to go a little bit more off of spot price than futures, though. But anyway, copper here continuing to have a good week, although it did reverse hard today. Again, we told you 4748 would be resistance. Look at where it backed off. Beautiful WV. And you can even make a case, I talked about this earlier in the week. What if this is a big W? I mean, right, this could just be a big W right here on the weekly, and maybe we could just, do I mean, it's possible, right? Possible. So copper holding up, good reversal there though. And then cryptos here this week. I think we're curling up here for a little mini squeeze, particularly on the alts. Bitcoin is still in a tight range. It hasn't moved since the last video I did for you guys here, but it is ready. If it wants to go pump, it can pump now. That 20 MA is caught up now. So if it wants to pump, it can do it anytime now. I'm not saying it will, I'm just saying it can, and it would not be extended. I think Ethereum can come up for come up for air, maybe towards 3,000, maybe a little pierce, maybe 32, 3170. Again, got to clear that 2,800 handle. So again, anyway, market's holding up pretty well. Yeah, we're basically, we're at all-time highs. So again, don't fight the tape while it's this quiet. There may be a bear window here, for Feb OPEX afterwards, but again, the onus is on the bears to prove it. Bull's been fighting off really bad macro data, bad tech earnings, the tariffs, inflation, right? DeepSeek, and this market continues to make higher lows. Oh, by the way, lastly, really quick, not last but not least, in addition to that, I can't believe I didn't bring this up in the beginning, but sentiment this week, most bearish since March 23rd, 2023. So that was right here during the regional bank crisis. And it's also the widest bull bear spread since November of 2023. So it's almost as if the market is trying to put in a bottom here. And I talked about the McClellan last week. This is indicating that we're at a low. So if we get into a situation where the stars align and the bears can't break us down, this could really blow off here and go a lot higher. I'm not saying that happens, but it's definitely something to be considerate of as we get here into the middle of Q1. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to find Jason on Patreon. Come find me on conovertrades.com. I'll see you guys all next week.